Today, we'll talk about a very crunchy topic in the space as we have more and more institutions coming, and that's privacy. So first of all, I'm glad to be here with three amazing experts, panelists, to talk about privacy. So would you mind starting to introduce yourself?
Hello, really nice to be here. My name is Mingshi, leading product and engineering at the Astar Foundation. At the Astar Foundation, we have been building a blockchain ecosystem focusing on Japanese market, working closely with Japanese enterprises, aiming to bring more consumers on top of blockchain. Recently, we have been switching our focus from our previous Layer 1 blockchain to Astar Stack, a vertically integrated consumer stack containing user-friendly interface, security tools, and fun hardwares. Yeah, thank you so much.
Thanks for being here. What about you, Beatriz?
Good morning, everybody. My name is Beatriz Callaghan. I'm the head of sales for Asia Pacific for Digital Asset, the company behind the Canton network. It's great to be here on our home turf this morning.
Good morning, everyone. My name is Matt Blumberg. I'm head of DeFi at Ondo Finance. We focus on RWAs, specifically the most liquid ones. We're number one in terms of TVL across multiple categories, tokenized treasury bills, as well as tokenized equities. Tokenized equities launched back in September, and in just a few months, we've hit 65% market share. So very excited to be here.
Great. Thanks for being here. So let's start. I guess privacy is not a default of blockchain today, right? You can see everything on Dune. You can see everything on Arkham. You even have sometimes bounties to flag some of these wallets if they're not identified yet. So as institutions are coming to the space, why do you think privacy is important, and how do you make that happen? Starting with you, Mingshi.
Sorry, I'll skip this question first. Yep.
Okay, well, I think the privacy question is actually something that's very important, and we're seeing it a lot in the market. In digital asset, many of you may know us for the Canton network, which was launched in June of 2024. So we've only been around for about 18 months, but digital asset, the company behind the Canton network, has been around since 2014. And we realized that the most important thing to be able to bring regulated financial institutions on chain is the importance of privacy, granular privacy in everything that you do in the protection of your assets, in the process of tokenizing your assets. The importance of having privacy is the only way you're going to bring the institutions necessary to scale the industry on chain, and that's actually the Canton network. The heart of that is through a modeling language called DAML, in which you're able to write out who a party within a business situation or a workflow is, code up who has the rights to see what, who can be a signatory, who is able to do different things. And then as you post those assets on chain and automate a process, those privacy controls are ingrained in it. So previously, when you had public blockchains, you were able to actually access information about your competitors, about other people on chain, and that was what was preventing regulated financial institutions from coming on chain. If you're able to have an open network, an interoperable blockchain network, but actually have privacy controls there as well, you're able to really prevent that trade-off that we previously saw in the industry. And I think that's an important thing to note, that you need to be able to have both in order to see the growth that we want to see and the adoption that we want to see as a market as a whole, rather than individual institutions having, say, private blockchain islands.
Right.
Yeah, I mean, I certainly echo the point that building into a world of private blockchain environments is not really why we're here, right? So at Ondo, most of what we focus on is really access, right? And at the end of the day, that means we tend to build products that do primarily serve retail users. But I think when it comes to privacy, everybody sort of needs a level playing field, right? Where is the line between retail and institutional, right? It's not immediately clear, and I don't think it's immediately clear that anybody demands different features from anyone else. So I think, in general, when it comes to privacy, everybody on the institution, like people in retail, don't mind if they have privacy and everyone else has privacy, right? Like, it doesn't really impact me if you're trading on a decentralized exchange and like I don't know who you are. On the institutional side, everyone wants privacy for them and for no one else, right? And so I think it's like a little bit overly simplistic to think that like, oh, if only we had good privacy on blockchain rails, like the institutions would be here and all our coins would be mooning, right? In practice, it's much more nuanced than that. And a lot of times what I see is crypto natives immediately understand how important privacy is. We've all used block explorers. We've all, tracked wallets. We've all seen accounts tweeting about large purchases or sales. For the institutions, it's just like one part of the world that they're trying to wrap their heads around, right? And so usually for us, we're like, it's immediately clear that obviously you don't want everyone to see what you're doing on chain. I don't know about you guys, but I use a lot of wallets, right? So that it's annoying for me to track come tax season, but it's easy for me to feel comfortable transacting across different chains. For the institutions, they're like, oh yeah, privacy, didn't think about that one. Wait, let me talk to the regulator and get back to you, right? So I think it's a pretty complex topic, but it's obviously something that like there are clearly use cases where we're going to need that for anyone to really come into the space.
Yeah, and actually just to echo on from that, I think one of the things, as you said, is important is finding that sweet spot in between. At Digital Asset, we started off in the kind of blockchain enterprise side of things. And what we were seeing were a lot of these very forward-thinking companies deciding on creating like supply chain finance consortiums or trade finance consortiums. But the problem is your competitors don't want to be part of your own kind of blockchain enterprise. It means that your information is visible to them, and why on earth would they join that? That also then ends up in the situation where you've only got these blockchain islands in which some companies are able to scale, but you're not getting that ecosystem effect. The essence of what needs to happen and where privacy actually enables things to do is that connectivity across all of the different institutions on a network and the transfer of assets across. Without privacy, you're going to have this kind of isolation kind of ethos taking over as people are competitive. No one wants to share their information with their competitors, but also no one wants to share their information with other people that have access to it, and you get that on chains. I mean, we were speaking yesterday about stable coins, and obviously one thing that we all want in the industry is one day to be able to go to a coffee shop and pay for your coffee using stable coins. But the problem with that at the moment, by using an open public chain, is not only does the coffee shop know that how much your coffee cost, actually you can then see where you bought your coffee yesterday. Your colleagues can see how much you spent on your coffee. Your colleagues can see how much you were paid by the company that pays you. And that information, fine on a retail level to a certain extent, but on an institutional scale, that's impossible. You're never going to see the scalability or the interoperability that we need in the industry to really kind of create the value add of being able to tokenize assets, extend them on chain, and then cross-transfer. So, very much agree with you.
Yeah, really echo with the points above. And I think what really matters here is just to have control over what information to be exposed. And sometimes it's actually about selective privacy. It's not about privacy, only about privacy. It's about selective transparency, having different layers of options, having the commercially sensitive data to be private, but also having those information that really benefits from blockchain's finality, composability, and transparency to be publicly visible. And also having the information sometimes may need regulatory oversight to be verifiable and auditable on top of the blockchains. That's also some of our experience from dealing with Japanese enterprises, although it's still very many blocks on the regulation clarity side.
All right. Thank you. So I think we all agree now that privacy is important for institutions, but not only, right, for retail as well. You were mentioning, Matt, that you have so many wallets, and I'm pretty sure you don't want anyone to know exactly what you have on your wallets once they've been flagged.
I mean, sometimes you do, though, right? Like, we actually see a lack of, not lack of privacy or transparency. Sometimes it's a feature.
Yep.
If you think about, like, an investor, a liquid fund, right? A lot of times people try to buy and sell things in a large size to send a message. And a lot of times it's also helpful for people to be able to see that you're putting your money where your mouth is, right? So if you're talking about, if I'm up here on stage telling you how important privacy is, and then I go and put all of my net worth into Zcash, I mean, it's not a great example because, it's not necessarily private, but it's helpful actually to see that someone is doing something the way that they committed to. So I think there is also some set of benefits that you get beyond what TradFi can offer you, where anybody can come in and verify that things are being done in a way that they thought they were.
Yeah.
Right?
No, I totally agree with you. I mean, at Canton Network, you use the distinction of having a glass house. Obviously, there are certain scenarios in which you want to be able to see, all the gold in a room, but the walls are glass. You can see what's there, but you don't know who owns it, you don't know how much they bought it for, etc., etc. There are situations in which that is a necessity and that's actually a value add. What we like to describe it as is actually, what are you able to do if the building of all of these offices is public? Everyone's able to enter. However, your own information is locked within a specific office. And this is kind of the ethos of the Canton Network. We have this, if you take the example of islands, you have the sea, which is the network, and then you have all of these boats, which are validators. No one else can access your data. That's private. But if you want to be able to transact and you want to be able to move an asset from one subnet to another, you're not connecting the subnets. You're not connecting these different islands. You're using a validator to go across these synchronizers to be able to transfer that information in real time with the benefits of having the visibility and transparency only to the legally required institutions. So I think finding that hybrid approach, which in my opinion is the Canton Network, is great, but all those value adds are very important to scale out the industry as a whole.
And I mean, I think you said it as well. You want to have the option, privacy or transparency, and you still want to have this meta liquidity between all these assets, because if you have the privacy feature and then you lose the scalability and the liquidity and the pooling essentially of all assets through a blockchain, then you lose the essence of blockchain in the first place. I guess we understood how you achieve that through the Canton Network. How do you achieve that through other tech, and what type of technology privacy approach you will take for Ondo?
So I think at Ondo, because our entire mission really does stem from access, right? People being able to access new financial products, people being able to, and access is not just buying, right? It's like being able to use them. It's being able to build new financial products on top of these atomic rails. I think in the interest of that, historically, we've always taken the approach that we need to be just where the users are, right? And so to the degree that users demand private blockchains like Canton, we will be there, right? To the degree that they demand interoperability with things like Railgun or Tornado Cash or whatever, we will do what we can within legal boundaries to participate there, right? I think what you're starting to see is it used to be this very black and white distinction between privacy and transparency, and now you have very good smart contract level control over privacy across many different chains. You have all these interesting tools like near intents that allow you to use private assets like shielded Zcash on public chains like Solana, right, and seamlessly interoperate with them. I think that extra level of customization is actually what's needed, right? Because historically, with chains that tended to emphasize privacy, it was sort of a red flag to anybody watching, right? If I'm buying Zcash and shielding it, I'm always worrying about does my exchange see that, right? Does my regulator see that? If I'm going to report taxes, do they now know that I'm a privacy advocate, right? And so even just by being there, it's a little bit of a tacit acknowledgement that I might be doing something I don't want people to see. And in our modern world, we have this trap that people fall into, which is if you've done nothing wrong, you have nothing to hide, right? And so I think with a lot of tools, we need to switch privacy on by default, right? And so if you're going to be active on Ethereum, you should be sending things through Tornado Cash or Railgun. If you're going to be active on Solana, you should be using similar tooling there. If you're going to be active as an institution, you should be working across all these different islands such that you're maintaining a base level of privacy as the default, right? And I think with better wallet infrastructure, with better exchange infrastructure, it becomes more normalized for the rest of the world to just have privacy by default and selectively disclose as needed. And I think that's going to really change the game in terms of how people actually interact with these things. And it's not, in a lot of cases, it's just obfuscated through block explorers, right? I don't know if you guys have ever tried to read soul scan, but it's pretty bad. And today there is like a level of like sufficient obfuscation by just like the block explorers being difficult to use. But with AI, it's going to be completely different, right? We're already seeing AIs that have the ability to read the chain, parse smart contracts, et cetera. And so it's only a matter of time before we have some kind of like crazy event where everybody looks at each other and says, wait, all of my information is public. Oh no. And then at that point, I think as a space, we will shift by default toward more private solutions. But I think it's going to be, for us at Ondo, it really is about where the users are.
Yeah, I actually really want to echo that. I mean, it's so interesting what you say, and it's so important. The journey of the Canton network, as I said previously, actually is the result of the work at Digital Asset. And just looking here in Hong Kong, some of our clients consist of the Hong Kong Stock Exchange. So we digitized the northbound Stock Connect process, so essentially tokenizing all of the assets going through the northbound Stock Connect into China from international investors. And we have been throughout our journey, we closed that deal when we were just doing smart contract deployment. This is on a database. It wasn't anything blockchain related. It wasn't distributed ledger technology related. And even at that point, the importance of being able to implement something new and something revolutionary required privacy at its most kind of core function. Being able to outline who sees what, when they see it, and which legal entities are required to see it in an atomic and scalable way was something that we saw very early on as being incredibly important. Again, in Hong Kong, one of our clients include HSBC. We digitized their tokenization platform, HSBC's Project Orion. And again, this enabled them to be able to create these granular controls around who sees what, how they see it, but it doesn't prevent them from being able to extend it out to additional networks. I don't know if anyone in the room was at the Hong Kong Jockey Club last night, but we actually used our technology to be able to digitize their bet proposals, meaning what was previously a much smaller pool liquidity in being able to only have win or pay bets extended across international betting partners, you now actually have 14 different bet types being able to be extended. And if you saw the number on the bottom of the screen, it's distributed ledger technology that enables this kind of cross-connectivity across all these extra additional parties, members, markets, that brings in greater liquidity. But you need that transparency to be able to track it from a regulatory perspective, but you need the privacy to make sure, there's no malpractice on the network either. You need to make sure that the data that is required to stay private stays private, and being able to bridge that across, as you say, that's something that the customers have driven. We're hearing from clients, okay, we want to have these private blockchain networks to be able to protect our information, but then we don't want it to prevent us from being able to not necessarily just bridge, that's not the safest way to do it, but being able to actually reinstate an asset on a different network through a validator and not just connect it through a synchronizer is something that is not necessarily just a tech drive, but it's very much listening to the market, listening to the demands from institutions on how it is that they see the future given their business practices. And I think, as you say, that's where it needs to be, and that's the way we can move forward.
Great. Mingshi, privacy use cases, how do you ensure connectivity while ensuring privacy?
Yes, from our perspective as application and use case builders, actually we don't really touch very deep into the tech stack of how to enable privacy, but instead we choose different tech stacks that has different layers of privacy, different levels of privacy. For example, when we build consumer-facing products where the users cares most about accessibility and the very friendly UX, sometimes we choose chains like Base, where we serve the audience on top of Base, on top of Solana, etc. And for certain use cases that users want to accessibility into more diversified assets, be outside of the crypto world, we can potentially work with Ondo's GDM, OGM on top of the Ondo global market in terms of purchasing the Ondo tokenized assets, and which will require a higher level of permissions. And it's the same thing with Canton. Actually, one of the contributors of Astar Collective is Startail Group. Startail Group has been working very closely with SBI in terms of issuing the first bank-issued trust-type stablecoin, Japanese yen stablecoin. And for the Japanese yen stablecoin to enable institution-to-institution settlement and those kind of use cases, there could be possibilities that we are exploring to deploy our JPY stablecoin, native mint and redemption on top of Canton to enable more privacy preserved institution transaction flow. Yeah, so it's all like case by case, use case by use case choices and options.
Thank you. I also want to touch rapidly, I think you mentioned it, but I want to touch rapidly about how do you ensure privacy while making sure regulators and have access or can verify certain amount of data, and how do you ensure scalability of a private layer essentially. So keeping the privacy while regulators can still check the data in a compliance manner and in a scalable way. Matt, do you want to start here?
Yeah, I mean, I do think fundamentally a lot of this is just intractable, right? It comes down to something as simple as like, I need privacy for me and not for you. And my regulator demands privacy for me, but not for you. And you might be in a different jurisdiction, and you might be on Mars, and you might not be a human, you might be an AI, right? And I think ultimately what we're going to see is a little bit of give and take, a little bit of a compromise, like any good relationship, right? Ultimately, if these tools are useful and valuable for people, we're going to, I think, see a world where the institutions do start to demand the ability to transact across public chains, the ability to transact with sufficient privacy. And as the world economy grows more and more interconnected, as we digitize the world's value, I think it's just going to wind up being a case where we have to try our best to prevent things like financial crimes. We have to try our best to ensure compliance, but there are definitely cases where, like, very, very simply, it's not possible. And so I think we've seen over the last few years a very encouraging trend where we are starting to see institutions come to regulators like, I need this product. I can't compete on the global stage without it. And, even something as simple as like a Bitcoin ETF, right? A few years ago in the US, we didn't know if that would ever happen. And then we started to see the global demand, and we started to see just the sheer scale of the crypto industry outside the US. And our securities regulators were like, okay, we have to give a little bit here. We have to enable these products to get in the hands of people who need them. And so, 8 years ago, we were all sitting here like, we have a vision, someday this is all going to be in huge demand, and the institutions are going to be here, and they're going to need all these tools. And then there was a little bit of like a delay function where now they're kind of coming to the table and saying, wait a second, we do need these tools, right? We do need to be able to transact in this permissionless system. And so I think it really does take these loud voices in the room, people that have the power, to lobby or to help shape, forward-thinking legislation, to go to people in the government and say, hey, like, we need this here. Let me help bring you up to speed, right? And so a lot of our efforts in the US do focus on trying to help our country create this like more modern framework around tokenized assets. It's something that we think we really need to get clarity on, or we are at risk of losing a lot of economic activity. It's very similar with privacy, right? It's going to be like people coming to the table saying, look, I need this. Let me help you understand how it works, what it does, and we can work together to figure out what's off limits, what's out of bounds, what's in bounds, and find a sort of common ground where things can be, sufficiently private without creating a lot of like negative side effects.
Yeah, I just want to add to that as well. I think it's important as well for regulators and for jurisdictions that are a little bit more kind of bearish on what it is that they want to look at within the ecosystem. It's having in production use cases. It's having things actually work on chain that are generating value as proof points. These aren't the days of POCs or sandboxes anymore. We're past that. I don't know if anyone saw the press release. DTCC has just signed onto the Canton network to do all of their US tokenized treasuries and be able to extend it out to much more global markets. The liquidity already that we're seeing in demand from actually Asian brokers, like here in the region, having so many people coming on board saying, this is something that we want to be a part of. And actually those are in jurisdictions where regulation is not as far ahead as it is in other places. And it's as a result of that needs to happen. We need to be having like in production safe, private use cases that highlight that this kind of scalability and this value add can be generated without it being this like huge turnaround in regulatory kind of. We need to reduce that fear essentially by proving out that this works and there's value in it.
Mingshi, yeah, we've heard the others mention about use cases and companies they've been collaborating with. I think you've been collaborating with Sony on your network. Can you essentially expand to what was the collaboration about and how they would use privacy or scalability or even compliance tools that you would offering them?
Yeah, actually, we work with multiple parties, not only Sony. So it is not directly with Astar Foundation. It is one of the contributors to Astar Collective. Startel Group has been working closely with Japanese enterprises like Sony, these days SBI. For Sony, what we have been exploring has been building is Sonian. It's an Ethereum layer 2, built mainly focusing on entertainment use cases. From Sony's perspective, of course, they have a wide variety of business covering entertainment, covering hardware, manufacturing, everything. And from their, and also, of course, Sony Bank, which is one of the largest neobank in Japan today. And from their perspective, when they exploring blockchain use cases, it is not about only moving like most of their business on chain. It is more about exploring potential new synergies that can be created together with blockchain technologies. In Sony's case, for example, Sony actually right now most part of their revenue comes from their IP holdings because they acquired a lot of IPs in their past deals. And what they have been exploring with on top of Sonia is how to leverage those existing IPs and to create more creator use cases, to encourage more creators to build on top of Sonium, to leverage the blockchain technology, to leverage all the incentive structure that's native to the crypto ecosystem. To encourage the creators to build different kinds of arts, different kind of creator economy on top of the Sonium blockchain. And with enterprises like SBI, they have different thought. They are more close to the TradFi area. They are the financial institution. So we have been exploring use cases of building a layer 1 blockchain, focusing on RWA of Japanese assets and perpetrating of crypto assets, and also the JPY stablecoin, which will be like the one focusing on on-chain carry trade and payment use cases. So it's all very different, case by case, enterprise by enterprise. They all have different demand, and we just do our best trying to accommodate their demand and find the best synergies between the different layers. And in terms of privacy, of course, for the entertainment use cases, privacy is relatively less a concern. What people care more about is IP rights, etc. And for SBI's financial use cases, privacy becomes a relatively big, larger issue. But right now at this stage, we have been focusing on building the infrastructure, getting the assets issued, getting the stablecoin issued, and on top of that, we choose different tech stack as Canton and etc. to opt in to different layers of privacy for different use cases.
Right. Thank you. Well, conscious of time, I would like to hear how do you see the privacy world in blockchains in the next 5 to 10 years, Matt? Give us a crunchy future view.
A crunchy future view. I think it'll be like HTTPS, right? I think it's going to go toward basically a world where the second you're not in a private mode, your wallet, your browser, everything is like, are you totally sure you want to do this? It might be dangerous, right? I think it really is just going to be like privacy by default. And I was just thinking like, it would be pretty crazy like 15 years ago if we were sitting on a panel at like a technology conference talking about, hey, do you think HTTPS is going to work? What about the regulators? Don't they need to see all your internet traffic, right? And with HTTPS, it's sort of immediately clear what the safety benefits are for the user, right? Of like not getting phished, knowing that they're connecting to the correct server that they're connecting to, knowing that like their data isn't leaking out into the world for bad actors to take advantage of. And in crypto, like all of these same things are true, right? But it's just not as like immediately clear to everyone involved that you do have like very important safety concerns when it comes to not transacting in private modes. So as we sort of wrap our heads around this, especially in the 5 to 10 year horizon, I just think everything, it's going to be privacy by default.
Privacy by default, HTTPS. you view in 5 years, 10 years?
5 years, 10 years. I mean, I think we've started the implementation for it. I think now what we're going to see is just significant more adoption to the Canton network and a lot more traffic there. Because at the moment, what it is that we need in the future, the brickwork and the foundations for it are being built now. So TPS.
TPS on Canton network. Mingshi.
Yeah, we still hold I think the key factor of blockchain is about having different options to be permissionless. I think for the privacy world, it's the same. We will see different kinds of technical approach, FHE, TE, ZK, shielded ways, etc. There will be different kinds of options, but based on the different types of use cases, people will choose different tech stack. For example, institutions may choose Canton, and for example, like some relatively shady gray zone areas, they will still go with Monero, they will still go with Zcash, they will still go with solutions like Tornado, etc. Yeah, so different layers of privacy for different use cases. And for some retail-facing ones, we also see like Zama, etc., based on their FHE solutions, which could really be helpful in terms of retail-facing kind of privacy transactions. Yeah.
Great. Well, thank you very much. I think we're on time. You've heard it from these three experts today. Privacy by default on blockchains with the meta liquidity, connectivity, atomicity that all blockchain efficiency bring. And so it's a bright and exciting future. Thank you very much, and have a good end of conference.
Thank you.